Good evening, all. Ira Epstein with your Tuesday evening metals market update. And this is for December 1st, 2025. And right now we're actually at about 5:55 p.m. Central Time. In the morning, we're going to get the Red Book retail sales for the week ending November 29th. That'll come out at 7:55. And in the evening, we're going to get the Tuesday afternoon API numbers. In terms of market action, we're getting a pullback, as you can see, in most stock indices, and this is normal. We had a big rally at the end of November. The market's overdue for a correction, and I think the same is very true in the metal markets. I think they got ahead of themselves. I think they'll pull back, and I think they will rally into year end. So I want to go on record that I don't think this rally's over by any stretch of the imagination. I think there's more to go. The question is how and when do you do it? We saw big breaks today in the bonds, the notes, all the different sizes. We were up a little bit in most of the energies, a mixed bag, and as I saw it in most of the grains, but basically the downside and very mixed, as you can see right now, in the soft commodities. When we step over and we look at the weekly gold chart, you can see that you made a nice gain. You're up 0.29% for the week at 42.30.5 if you look at the lead month on the weekly gold chart. When we come to the February gold, you can see you got up today and closed at 42.74.80 in the Feb, and you're backing off tonight a little bit. When we take a look at the swing line, you have a pattern. And by the way, remember, I am offering 1/3 off on any of my charting courses, and you can upgrade any of your subscriptions for 1/3 off by going to iraepstein.com under the research or the subscriptions. And I'll talk more about this at the end of all this. But right now you've got higher lows, higher highs, bullish. Where do I think the market might want to pull back? Well, I'm not saying it will, but $100 lower, and I get interested in the 41.57 area. That would mean you'd have to have a stop under the most recent low, and that would be right here at 40.72. And on the small contracts, that would make a lot of sense to me. We've gotten up to the upper Bollinger Band. No surprise. I thought the market would peak out up there. For those of you that don't pay attention or aren't on the combo part that I did have my traders long GLD, and I had them come out of that today with about $17 a share profit. And we'll see how the markets pull back if they do. I'm hoping they do. You're overbought. This is not a buy zone for the market. Let it pull back. The gold-silver ratio continues to favor the silver over the gold. Tonight, not the same. You're giving back in silver quite a bit. Silver market, as you can see, was up $1.97. It's down $1 of that right away. It got over the upper Bollinger Band. How often do you stay over a Bollinger Band? If you take my charting course, you learn only 5% of the time. This is called a gorilla glue trade as the market keeps hitting the upper band, but it has not succeeded in making the slow stochastic embed, so the odds of a pullback are strong. That doesn't mean it has to happen, but it means that you're ready to buy on a good break in the market, and we haven't had one yet. In the copper market, we made a move today that goes up near the contract highs. So we've been coming up here and coming up here. And I shouldn't have said contract high, the most recent high, because you can come back here and you've got different numbers all together. And then you come over here and you have even another set of numbers. But the 534.5 area is the number that you have to look at for a resistance point. You're coming up into overbought territory. I measure overbought, as you know, by looking at where the slow stochastics are, and any reading under my version of slow stochastics, which is not the same as yours. I do give that formula out for free to my subscribers of my updates, and it will work a little bit different. The man that developed slow stochastics, George Linn, I shared this with him many years ago, probably, 20 years ago when I was doing this, and I showed him something I found. He said, Ira, there isn't a technique out there that people shouldn't take and try to enhance it, and he was right, and I think I found a better mousetrap, so to speak. In the platinum market, getting 2 days over the upper Bollinger Band, you want to pull back a little bit. The market is overbought. It's not an area that I would have you chase. And when you look at the dollar index, you fell today pretty hard. You came down to the 200-day average and the combination of the Bollinger Band. This is the 100-day average. So that combination is an area where I think short covering took place in the market. And I think you can see that that was the case as you bounced back and got very close to unchanged.